autonomous driving car is talking to another car right now, right? We're not driving, we're just sitting there. The communication, the calculation is not very difficult. So you don't really need to send them to Amazon's huge data center in Virginia and send them back to you in New York. What's important is the latency. They need to communicate real time all the time. So latency becomes super, super important, right? Because if you cannot communicate real time, the car might crash into another car. Now, here's what the edge computing business of Cloudflare company work. Because they already laid the most comprehensive and most reliable city servers around the country. Not in just every state, but every city, every county level. They have a lot of servers in Manhattan as well. So the car can simply send the easy calculation to the server adjacent to the car and send it back to reduce latency, to make the real time possible, right? Now, obviously, 15 years ago, when Cloudflare laid this huge infrastructure in the United States, they have no idea they have such a big implication in the 5G era for autonomous driving and for VR/AR. They got lucky, and now they already built a moat, right? Because they would say, hey, look, Amazon or Microsoft Azure, they can replicate it. Yes, they could, but that only not takes money, but also takes time. Because in the US, the regulation frameworks is super complicated. To get a permit to build your CDN service network around the country, it takes 10 years. And that's why we have a super bullish view on Cloudflare that our edge computing infrastructure will be in place, are already in place, that have a massive tailwind behind them in the 5G era, catering to autonomous driving, catering to AR, VR space. And that's why, despite the fact that business right now is only less than 10% of overall business, right? So there's not a lot of data for machines to see. But we can see the potential. We think in 5 to 10 years, the new business, edge computing business, can be much, much bigger than their core CDN business. And that's why the stock went up since 5x, since 2019, since we owned it. But we still think there's upside to that name. So that's bucket number 2. And then bucket number 3 is really on the consumer side. It's really about how do direct to consumer shift the consumer's behavior. Traditionally, we have a lot of brands who rely on foot traffic and brick and mortar shops, and sometimes rely on big platforms, Alibaba or Amazon, to push out the stuff. And now we're looking at some brands that are very smart. Instead of using the brick and mortar approach or using, spend a lot of money on advertising on big platforms, Alibaba or Amazon, they're really building their own customer acquisition channel using the new social media, not just like Facebook, Instagram, but really through TikTok and also lots of streaming platforms and through their own chat groups. So, you see a lot of companies in China particularly building their customer base on WeChat alone, right? So that's your captive audience. Once you capture them, put them in the WeChat groups, you no longer need to spend money to maintain them. It's completely free traffic. And people a lot of brands are taking advantage of that, right? To reduce friction, to reduce their marketing and sales cost, and using that to build brand new sales channels to push new brands. And we think that's a mass potential going forward. We see that doing a lot emerging in China. We think going forward that's going to become big trends in US and other parts of the world.
Sorry, Rob, any particular companies that do a good job with owning this private traffic that you have been seeing?
Yeah, so there are a lot of, I would say, private brands who are doing that, especially for lots of nutritional guys, because A, they're subject to a lot of regulation, and 2, it's really tough to sell them through streaming or TikTok because these are nutritional products, right? It's not a piece of apparel or cosmetics you can actually show on a piece of a camera easily, right? These are for house nutritional products. So the key is really how do you constantly provide easy access to educate your customers, right? Now you can host classes or seminars offline, but now using online approach, how do you keep pushing the content to constantly educate them so they'll come back and buy more stuff from you, right? So we see some big brands, not just Chinese brands, but some American brands are adopting that since the global pandemic. For example, USANA and New Skin. 2 of the brands are completely US, but their China team has really come up with a super innovative ideas like capturing customers through WeChat and using WeChat as an education platform, right? To keep them constantly in touch And now they're learning from experience in China and thought that's a really cool approach. And they're taking that back to Korea, taking that back to Mexico, and taking that back to US. So we think that's actually a very, very interesting approach. And we'll see how they do outside the China market.
Fantastic. I'm very bullish on the three topics that you mentioned as well. And I'm particularly interested in this private traffic angle that you mentioned, because we have all lived through these COVID times where we saw the costs, the CAC in Google and Facebook and the social media, the price is just skyrocketing. And that is not going down. So that is yet another reason to really, really own the relationship directly with the end-to-end consumer. And I like to study a lot of what Nike has been pushing. It's very, very, very interesting. And Rob, I really enjoy always talking to you because you have this global approach, born in Chongqing, educated in Yale, now studying, now doing some real damage globally, based in New York. But I want to ask you this. You spend your days studying companies, and digital transformation is this huge topic that everyone is focusing, discussing right now. Can you highlight for us a case of a company that you admire that did a good job with digital transformation? And if you can, after you explain the case, maybe some key learnings that you think can be applied to other companies that are here in the audience.
Sure. It's funny. We were talking, Ricardo and I were talking offline about Max and Louisa, which we're a big shareholder of. But since we got out too early, right? That was a massive digital transformation story from pure offline retailer building up their online capability and become a dominant force in the Brazil online retail channel. But I'm sure you guys know Max and Louisa very well. So I'm going to give you another example, but also in the e-commerce world. So Shopify, I'm sure everyone knows about it. Basically what they do, they help brands, big or small, sell through existing online channels or building their own online shops. So their transformation, we can call it digital, but the interesting angle is that they actually went the reverse side. So 2017, before the end of 2017, Shopify is purely online. And starting the end of 2017 through 2018, they did a new initiative going from pure asset light to asset heavy, aka building their own fulfillment, logistic, and payment infrastructure. Now, back then, all the US-based investors looking at that transition or transformation, and it's like they got confused, like, we don't like it. You're an internet company. Internet company is supposed to be asset light. Asset heavy, reduce your ROI, and that's not our approach. We don't like it. Nobody's like it. The stock did not perform. We actually found this very, very interesting for two reasons. Number one, we're global, and I'm from China, so we actually know there's a company in China called Baozun, which is basically the Shopify for Asia and China. They did exactly the same transformation from pure asset light to asset heavy, actually way ahead of Shopify. And that was a success story, right? People don't understand, but eventually built up their moat. They built up their own fulfillment, a logistic payment infrastructure, able to keep their customers. Nike is actually one of their biggest customers, right? So that was a success story. We've seen the story, we've seen the playbook. We thought, okay, China's a different market from North America, but that could actually work in the US. And that's reason one. And reason number two is really, there's a context of why Shopify is doing that in 2017. And that context was Amazon. So Amazon has their service called Fulfillment by Amazon. So basically provides all the logistic services for brands selling through Amazon. They started raising price in 2017. And that move actually pushed out a lot of the small, medium sellers off the Amazon platform. So Shopify recognized the opportunity and they realized if we basically replicate, build our own Fulfillment by Amazon, build our own FBA, we can basically capture all those people who got pushed out by Amazon, right? We can reaccelerate our growth. But initially, obviously, they're spending the CapEx. Machines see cash outflow. They're not seeing the result. It took 3 quarters for them to show the results, to bear the fruit. But after 3 quarters, that turned out to be a great decision. They built up their moat. They attracted more customers. And now, Shopify is no longer a small business. It's a fantastic, it's a huge business. And because it went through, they went against the consensus of view, going from pure asset light to an asset heavy model. And we're able to make a lot of profit from recognizing that transition early. And the lesson, what we took and, we share with the other tech companies we talk about is really, don't be dogmatic. Don't be dogmatic. Yes, you're an internet company, asset light is the way to go, but also think outside the box. Maybe sometimes investing your offline infrastructure could be quite interesting, could actually generate even higher ROI for you, right? Don't just do what your competition is doing. Don't just do what the VC tell to do. Really understand your context. Really identify the opportunities in the market, and also pay attention outside your core market, right? Don't just look at US. Maybe there's some interesting companies such as the Baozu in Asia who has done this before, and maybe you can learn from them. So that's what we learned from this very cool transformation story.
No, this is fantastic. It's funny that Baozun, I just took a look. The market cap is less than $2 billion, and Shopify is over $150 billion. But looking at that company, that is by no means small, but it's another scale. You saw the seeds of the insights. Very, very interesting. Even though China has been Brazil's largest trading partner since 2009, I would say not only the average Brazilian, but even the elite in business is not very well educated on the latest trends in China. It's very hard to get good information, good access to what is happening with the best of the best in China. So I want to ask you that, because you do that on a daily basis. I do that on a daily basis. And I try to bring a lot of insight to a lot of people. It's part of my job. You mentioned Magazine Luiza, Fred Trajano, the CEO. He looks at China with magnifying glasses. He has to. Anybody that is in retail should be looking to China. Even people in Silicon Valley are doing so. So what would you say? What right now are you looking at from China that you're like, in this area here, they are ahead. I wonder how we're gonna westernize, if you will, this and that angle. Where do you have your people spending more time on right now in China, Rob?
Well, China is a fantastic opportunity, especially right now since the July sell-off. But I think you're really asking two questions. One is that what are the biggest opportunities from an investment perspective in China right now? And two is that what are the new things that are coming out from China that should be copied by everybody else? It's like the Baozun. Maybe Baozun doing something right now that Shopify or VTEX in Brazil could learn from. So I'll address the second part of the question first. One big thing I think we touched upon this a little bit is really how do you retain generate and retain the private traffic and really own your customer relationship. And that's something I think a lot of the Chinese private companies have done extremely well. But in terms of replicating that in the US or other parts of the world, in Brazil, it's not be very straightforward because there's a big social infrastructure in China called WeChat. And there's so much thing you can do there. And since July, Mr. Xi forced them to open up the walled garden, right? So a lot of more brands, including their biggest competitors, can have access to that customer data. And you can do a lot of data mining, understand your customer profiles, understand your demographics, actually do a lot of stuff to retain those customers on your WeChat platform. And WeChat can do nothing about it. They have to open up the gate. Now, WeChat is the dominant social messaging platform in China. Now, we do have one in Brazil. It's called WhatsApp, which is owned by Facebook. But in the US, there's nothing like that. US is still very extremely fragmented. A lot of people use Facebook Messenger. Some people use WhatsApp. A lot of people simply use text. A lot of people use iMessages from Apple ecosystem. So there are a lot of walled gardens out there. They're not really talking to each other. So directly replicating that from China could be difficult. But I think in Brazil, and now Facebook's trying to monetize WhatsApp, allowing business to set up a business accounts on there to acquire and maintain their traffic. I think that could be really interesting. The second piece, I think what we observe in China right now is really the live streaming as a way to reach your customers. Now,
Rob, before we go into live stream, I just want to add a couple of things because I don't know how well people know China, but basically, when you mention about private traffic, I think it's good for us to unpack a little bit here for people. You know, when WeChat started, Tencent made money other ways, and they made a product decision to not have ads, so they would not monetize through ads. So imagine you are a company in China and you want to reach out to consumers. Here in Brazil, where do you go? You go to Google and Facebook. There is no Google, there is no Facebook in China. And WeChat, which is, like you said, is WhatsApp, is a super app, is way more than WhatsApp. It's not very open through ads. Even today, they make some money through ads, but they could make so much more. They decide not to enhance the experience and for a bunch of other reasons. Another being they makes just so much money with gaming and other things. But now the government came and said, hey guys, your platform you have to open. Others have to be able to access the data that goes through here. And the way that the war happened in China until very recently was if you would share a link from Taobao, from the Amazon of China, on WeChat, it would be impossible. Imagine you are trying to send a link to your friend from Magalu or Mercado Libre, and your friend cannot open that link. This is the walled garden that Rob is talking about, and that's gone. So China is going through a lot of transformation right now. It's not very clear what's going to pan out, and that's where people like Rob make the big bucks because they have conviction one way or another when the market does not, and they bet the house. So I just wanted to clarify these 2 points that I think, there is so much to unpack here because, the regulation that is happening in China, I think that will happen in the West, some forms of it. These huge platforms, they can do as they will, and nobody really knows what happens, and I think it's coming. But anyway, I don't want to deviate too much. I just wanted to elaborate on that. So please go ahead.
No, I appreciate that clarification. That's a classic example of information arbitrage, where people have information understood the context can actually profit from that. So the second piece I mentioned, which is live streaming, which is now a huge phenomenon in China, where brands hire stars to live streaming through TikTok, through Alibaba's, through every single e-commerce platform, and now Kuaishou, which is the biggest competitor to ByteDance, which is the parent company of TikTok in China, live streaming, that's such a vast majority how they make money, how they monetize their traffic. And they're pushing their e-commerce platform right now. And the e-commerce, how do they make from e-commerce? Is all through live streaming. Just let influencers go on their platform and start like live stream, a table, a car, or whatever cosmetics brands, and really push the consumers. Now, why is that a big phenomenon in China, but it's not a big phenomenon in the US or Brazil and other parts of the world? I don't have a good answer so far. Nobody has a good answer. And a lot of people say, well, China got 1.3 billion people. That a lot of people live not in big cities. They don't work 996, 24/7. They only from 10 o'clock to 4 o'clock, and they take a 2-hour lunch break. They have a lot of free time. And therefore, live streaming, that's a form of entertainment, but also a way for them to get to know new brands. And that's why people are really interested to do that. Whether that could be the case in the US or Brazil, other parts of the world, we'll wait to see. I understand, we spoke with Facebook recently. They're trying to do something around that. They're doing some beta testing. They're not sure if the customer will be, receptive to that. But we'll see. I think it'll be a very interesting form of selling stuff. It could be only a China phenomenon. It could be for global. So those are the two things I thought could be very interesting for companies and consumers outside that region. Now, to address your first question, which is really from investment perspective, what do we see? What do we like in China? And I want to break.
Rob, before you go into the investment perspective,
sure.
Just a couple of things on live commerce. I really like your intellectual honesty to say, I don't know, let's see, but we're watching. Because in China, in the past 5 years, about 10% of all e-commerce came from live e-commerce. And I was living in China until January last year. And when I go buy stuff here, I miss seeing the video. It's just different. For me, it's an evolution. I think there is a space on the buying experience for some live e-commerce. I think sometimes the Chinese took to another extreme where you go order a Didi, a Uber, and there is live streaming there. And it's like, ooh, do I really need that? You go order food on Meituan, there is some kind of live streaming. Like maybe, I don't know. But I was just studying this. How did that came to be? And I saw that one of the key reasons was that Alibaba made a huge push to make this a reality very early on. And how they put on their prime real estate on Black Friday, 11/11, which is coming soon, the 11th of November of China, Singles Day, is in one day, only Alibaba sells more than everything that is sold online in Brazil in a year. So in that event, kind of like our Black Friday, Alibaba featured live streaming prominently in their most premium real estate, which is what you see when you first open the app. And Alibaba is so powerful. They have 1.2 trillion with a T of GMV, which means only 17 countries have a GDP larger than what goes through in Alibaba's platform. So the big tech in the West, they have been experimenting with this for years now. You mentioned Facebook. But what I'm curious is that, you know what was the most downloaded app in Brazil in the first quarter of this year? It was Quai Show.
Quai Show, yeah. They're international now.
Here is Quai. And the second most downloaded was TikTok. And they both use live streaming to sell a lot, very large GMV, a lot of money goes through. So I'm following that closely. I think anybody that is in those sectors needs, it's not, we're not giving any. I think people are aware of that. But I
think any country likes fun people will definitely adopt that much more. But we'll see.
Okay, so let's go for your picks on investments.
Right. So in terms of investment, right, I want to break that down to China tech and China non-tech, right? Because when people talk about, oh, there's a big sell-off, but everybody only talk about China tech. But they forget that China is the second largest GDP in the world. And China's equity market is the second largest equity market in the world, only behind the US. And in the entire China equity market, the second largest in the world, only 25% are tech. So you're looking at 75% that are actually non-tech. And that market also has sold up significantly since July. But that's pulled down by the tech sell-up. But everything is getting sold up, which they're not subject to tech regulation. They're not subject to the US-China, like their dispute on tech, taking out all those like ADR tech companies moving back to Hong Kong. So I always tell people, when you think about investment in China tech is a big part of it, right? And it's very easy because most of the China tech companies are large and they trade in the US. It's easy to access. But don't forget, this is the second largest equity market in the world. And 75% at that pocket of that pie is non-tech. And there's a lot of great business there, which we're going to talk about in a minute. But let's focus on China tech. We think right now that probably the two best companies in the China mega tech land are Alibaba and Meituan. First, about the high-level discussion, why we think that's the case. The very simple answer is that these are the two mega cap tech companies have been punished the first and punished the most. So I always tell people what we call my school bully theory. If you want to be a school bully and make sure everybody fear you, you don't want to just punch the same guy, right? If I keep punching Ricardo at the same time, like every single day, everybody will think, well, maybe Rob Lee's not a bully. Maybe something wrong with Ricardo. That's his issue. But if you punch everybody in randomly, everybody will live in fear because nobody knows who's safe, who's not safe. Nobody's safe, right? Now, if you think about if Mr. Xi or Chinese regulators want to be the bully, they should not keep punching Alibaba or Meituan consistently. They should land their punches on every single guy. And you know what? Who's the safest right now? The guy who got punched already. Alibaba and Meituan. Alibaba, we don't even know whether Ant Financial can go IPO. Maybe never. Alibaba paid 4% of their 2020 top line as donation. Meituan paid 3%. Still better, slightly better, but not so much. 3% of 2020 top line as donation to the state. They've been punished severely. Some of the large guys have actually not been punished. And that's why, from a regulatory perspective, these two guys are probably the safest in the spot right now. I'm sure you guys already saw the news today that Mr. Jack Ma showed up in Europe. So that means he's in a very good spot. Because I can tell you, a lot of entrepreneurs and big investors I know in China, they still cannot leave their border. So they are much, much worse spot versus Mr. Jack Ma right now. And specific to Alibaba, from an evaluation perspective, right? Let's take out 100%. Let's write off 100% and financial. Just assume we'll be taken by the state, never go IPO, right? And you take out their cloud business, you take out their Slack business, which is called Ding, which ironically is actually much better and much larger than Slack in the United States. Their core e-commerce business, basically trading less than 10 times free cash flow. Even if you sue, the market will no longer grow. They'll keep losing market share to PVD, to JD, to other guys. 10 times free cash flow for a steady cash flow generator, that's a very, very good evaluation. And that's why I think, this is really good, interesting business. And Meituan the same. Meituan, the core business is food delivery. Even if you say, okay, that business can no longer grow 15, 20% every year, they have so many new things. They're moving to the upstream of the food catering business and becomes the supply consolidator for every single restaurant in China. So they're basically doing what Cisco and US Foods are doing in the United States, controls the supply. And the market is like 4 times the size of the United States. So basically that business can be bigger if they execute well than Cisco and US Foods, the two giants in the US combined. That alone is a massive upside to Meituan, and nobody's talking about that. And that's why I think that business could be really, really interesting. So that's on the China tech line. China non-tech, there's also a lot of interesting business. There's so many we spend another hour talking about it. I'll give you really one quick sample. This is a classic baby out of bathwater story. So everybody know the China tutoring sector got killed by Mr. Xi in July. We got lucky. What happened to short one of those big guys called Gaotu or GSX, which has been the best performing short for us. But when the sell-off took place, the entire education, everybody sold out 50%. We start picking up pieces. And we actually bought, at the end of July, a company called China Education Group, traded in Hong Kong. It's the largest private college operator in China. At that time, we're talking to some clients, and clients are like, are you crazy? After what Mr. Xi did to the tutoring industry, you still want to touch anything education? We will not touch anything education. Zero, nada. Why do you want to do this? Well, I understand a lot of fear in the market, but we explain to our clients, this is a classic baby out of the bathwater. Because why? Because as a private college operator, it's creating more seats. It's creating more capacity, more supply for the children who want to get their bachelor degrees. Why did Mr. Xi kill the tutoring industry? Because he doesn't want the kids to go through Squid Game and kill each other for limited spot of bachelor degrees so they can get jobs and have a good life, right? Now, you can do one thing, which is tell them not to kill each other. Destroying the tutoring industry is one way. The other way is that instead of creating, instead of limiting the demand, why don't you create more supply? And these companies are addressing that agenda of Mr. Xi, because they're saying, hey, Mr. Xi wanted more seats, and you don't want to put in capex. It's okay. We put in the capex. We create more school, more seats for his kids, and everybody will be happy. And this is why last Friday, when finally the policy paper came out, Mr. Xi said, okay, you know what? Private college operators are good stuff. They're creating more opportunities, more seats for our next generation. Government should encourage them, not fuck with them. And that's why you see on Friday, everybody within that sector jumped 20%, right? But we were able to buy that early back in July and August. And they basically to front run everybody else because we understood education are not created equal. Education companies are not created equal. So that's a quick example of the non-China tech side. But the point is, it's a massive market, whether you only want to do China tech or want to do everything. There's always a lot of good opportunities. We just need to pay attention and capture them.
Oh, this is so interesting. I did not know that you did that trade. Brilliant. Just a little bit of information for the folks here. Basically, the Chinese government ruled out, said that the tutoring sector in China would be, from now on, they cannot have any profits. They must be non-profit companies. They cannot take outside money. They must not IPO, and so on and so forth. And the reason why they did that is what Rob explained. Just a little bit of data. In China, about 10 million people do the Gaokao, the vestibular, the SAT of China every year, but only about 5 go to college. The other 5, there are not enough college for these people that want to go, but there is no room. And one of the key reasons why the tutoring regulation came about is that the richest people have more money to pay for the best tutoring, and then the Chinese culture is so focused on education that the people that did not have money, they were feeling that their kids would not have a fair opportunity to improve their lives. So that's one way of seeing the market. Because Rob, I saw a lot of news here in Brazil and in the West saying things that were very superficial, like, oh, the Chinese government does not care about your money. So they do these crazy things, and foreigners are not welcome, and so on and so forth. We don't need to get into detail, but I just wanted to unpack a little bit. But that is, I like it. I like what you did there. I'm glad the results came so quickly. Sometimes they take longer, but I totally agree.
I thought it was going to take longer. It happened faster than I thought. And now the clients have now realized, okay, maybe that was a baby out of the bathwater, not just a bathwater.
Very interesting. Now tell us some of the mistakes you've done and what you learned.
Look, we're an investment professional. As you know, investment professional is really about getting 50% right. That's already called you're a genius. So we make this all the time. But a lot of mistakes we make really comes down to really do not identify the core pillars of pricing power, or misunderstanding that pricing power. So for instance, we used to invest in 2 big LED manufacturing equipment makers in Korea. So after the consolidation, it's all been 20 years, there are only 2 guys left. One works for LG and one works for Samsung. These 2 happen to be the 2 largest LED manufacturing globally. And we thought, we've seen a lot of these oligopoly story, in different sectors, in different world, different markets, in cement industry, in car industry, in airline industry. When you come down to the monopoly, duopoly situation, typically it's very good. So we thought, okay, I think their margin could really expand. They should be able to sustain that gross margin, and both of them are going to do well. So we bought these 2 companies, but we turned out to be wrong. Why? Is we forgot to understand on the supply chain and the value chain of the industry, who really control the choke point. Are these equipment manufacturers, or is really their clients? What we fail to understand is that the roots or the background of how these 2 companies became about was, one was internal division of Samsung. The other guy was internal division of LG. So they have extremely strong relationship with their parent company, formerly private company, and the formerly private company still control their fate. So basically, Samsung can dictate their guys' pricing, and LG can dictate their guys' pricing. So initially, we thought there's a huge margin opportunity because the markets became only 2 guys left. But turned out that gross margin never changed. We hold that stock for over 2 stocks for over a year. That gross margin story never delivered because we realized they don't control their fate. So we had to get out and take our loss and move on, right? But this lesson we learned. Not every oligopoly situation will work. Not every duopoly situation will work. You got to really truly understand their roots, how they come about, where they're from, what's relationship with customers, and really who has the pricing power in that relationship. So that's very important.
Very good, Rob. And what have you done in Brazil besides Magalu? Tell us a few cases here, and what is your view on Brazil and in the future, and ups and downs, and positives and negatives? And
we're very bullish in Brazil. We think Brazil, we'll break it down from tech and non-tech. On the tech side, I would say the best fintech market in the world is not China, it's not US, it's actually Brazil. And we see so much innovation coming from Brazil. I think because the unique environment, because the country is dominated by a few extremely powerful banks, and the interest has always been so high, especially for these small, medium sizes companies, right? And the traditional infrastructure is simply not there, which allows the fintech, a new cohort of fintech companies, not just one few, not just a new bank, not just like Paxguru, not just Stone, but a lot of fintech companies to go in there and disrupt, because there's not room for them to disrupt, right? Because, for example, in China, interchange rate is so low and is controlled by the government, right? It's like in China, it's like less than 0.1%. There's not enough room for people to make money off that. And that's why you see nobody offering credit card reward or this reward or cashback or nothing. But simply, it's not an environment allow them to thrive. Versus in Brazil, the margin's so fat for a lot of these banks that creates like a fantastic environment for a Brazilian fintech startup to really attack the market and gain these customers. So, we've been shareholder in Stone at Paxguru. We're not there right now, but that's always been a really interesting market for us. And some of the other business, like, internet related, dLocal, which is really trying to provide very easy, payment and / tax services for a lot of the multinational who want to do business in Brazil. That's very unique. And there's a lot of software business in Brazil. Think about links, you think about other business, because the tax regime in Brazil is so complicated. We talked to a lot of multinational doing business in Brazil. It's like, this is the most difficult tax regime country in the world. And because of that provides a lot of opportunities for these software and tech companies to create solutions, because you don't want to deal with different tax regime, different states. We'll provide solution, right? It's a very sticky business, and it's a very attractive value proposition for a lot of foreign companies trying to operate in Brazil, right? So that's like, let's match. And you think about some other internet neighbor business like VTEX, which are trying to do what Shopify and Baozun are doing. Think about local web, which is trying to do not just like the GoDaddy business, but way more. They actually want to do the Shopify business. It's just like fantastic opportunities. We're very, very bullish. People here, companies are very innovative. They're very aggressive. They work very hard, and the market is very ready for that. So that's on the tech part. And the non-tech part, we actually
tell me more about local web, Rob. You used to be a shareholder there. Give me more color.
Yeah, so obviously local web, as you guys know, is the core business, right? It's a little bit Caldeira. They have the core business, which is like everybody knows, helping you set up a website, registration is not so indifferent from GoDaddy in the US or Buy Cheap like in the. So that's the core business, right? But the key is really a little bit like Caldeira. How do you build new services and new product on top of your existing business to further monetize your clients, right? So let's say, and now we're trying to really penetrate the e-commerce space and say, hey, look, we can basically create our own Shopify-like business, right? You already set up a website or buy a domain from us, and you want to sell your service, your products online. Maybe we can help you build a full store online. Maybe we can hook you up with payment operators, with logistical operators, fulfillment operators, and basically provide a one-stop solution. And maybe we can become your CRM database or CRM manager going forward, right? So already have a huge amount of clients that are trying to do something online because people will just a website to do something online, and they realize if we build up all the capability around our core offering, that's the way to further monetize our client base without spending more acquisition money because already our client, right? And those new services actually way more profitable than our core traffic generating website setup business or registration business, right? Because eventually you can basically offer your website registration or setup service very free or close to break even, right? To get a lot of cheap traffic. And once people stay with you, you figure out other ways to monetize them. So that's actually a very, very interesting thing for them to do.
Fantastic. And Rob, you were gonna mention about some non-tech companies. If you wanna mention just one in Brazil.
Yeah, so we're a big shareholder in Embraer, which is a state-owned airline right now. Obviously, that's not like a 10-year growth story for now. But the reason we got there was, if you guys recall, when COVID hit, obviously it's massively bad for the airline industry. And at the same time, you guys recall, they used to have a JV. Embraer used to have a JV was Boeing, right? And Boeing is like, sorry, COVID hit, we lost a lot of money. I know we're supposed to give you $5 billion for the JV. Sorry, we're gonna walk away from the deal. That's massive, right? People just don't like that, and people thought this company's gonna die. We've done a lot of work. We analyzed their balance sheet very carefully. We understand this SOE company. They have ample runway in terms of debt because their duration of it is very long. Number two, they already got emergency financing from Brazilian Development Bank, which is basically carries zero interest rate. Super good deal for them. And three, because of SLE, we analyze the cost structure. They can easily cut like 300 million costs per year because they have just so many people on the payroll who are doing nothing, just like drinking tea and enjoy life a year, not doing work. They can actually reduce the salary of that. And you know what's funny? COVID was actually the only catalyst. Allow them to reduce salary and to lay off some of the people. Now, obviously, they still have a lot of like easy people on their payroll, but they actually were able to cut 100 million operating budget for costs because of thanks to COVID. So coming out of COVID, the company become a lot leaner, a lot more cost conscious. And you know what they do? What's interesting about them? They don't do big airplanes. They do only single aisle. And when you see the airline travel, the recovery, where's the recovery? It's not between cross Atlantic or cross Pacific, because international travel are still very, very tough. A lot of borders, including China, are still closed. But intra-region, intra-Europe, intra-Latin America, intra-country, those air traffic recovery has been very, very fast. And you know what are the airplanes fly those routes, short-haul routes? ERJ's airplanes, because they're single aisle and they're way cheaper than the competition from Airbus and Boeing. So their single aisle airplane business is actually booming right now. And that's what we thought. That's something the data are not telling the market, and that's something people are not paying attention to. And that's why we're able to get in early. So we got in early around 6 or 7. Now it's almost like 18. So we already triple our money. But we still have things there's like massive upside there, because if they're looking for a new partner to replace Boeing, it could be China's Avic, it could be India, it could be somebody else. If that happens, there's even way more upside there. So that's one example outside the tech arena in Brazil.
Very interesting. They used to have a factory in China. They don't anymore, but that's another story that we're going to leave to another day. Rob, one final question, my two final questions. First, tell me some book recommendations. What are some of the must-reads that you would recommend people to read?
Yeah, this is always recommend, for I guest lecture a class, University of Colorado, and also CUNY, City University of New York. I always give my students like the most important thing, and that's by Howard Marks. Really talking about risk, right? And because I think it goes back to our investment approach. He made a very good. The central thesis of the entire book's really comes into one sentence. Really, volatility is not risk. Risk is permanent capital loss, and volatility is not equal to that. Because of our entire approach, like private equity approach to public market investing, a lot of companies we invest are smaller in size, and they show a lot more volatility. For example, Cloudflare, it went up by 5-6x since 2019. But during those 2-3 years, there's a multiple 20-30% drawdown. Even like 2021, this very year, in March, in May, and also in September, if you go back to the stock chart, you see there are 20-30% drawdown, right? For no reason, because the US market is so dominant by passive and quant trading. And they're so short-term data focused. So when something noise happens, they just sell the market. But we always tell our clients, tell our own team, and tell everybody we know, volatility is not risk. Volatility is actually an opportunity for long-term investors to pick up good assets, to really generate alpha. And that's why we actually added to a Cloudflare in March, in May, and last month. We're able to benefit from them. Now it's heading all high, right? but we had the stamina and the patience to actually add when we see 25%, 30% drawdown. Because we understand the business fundamentals are still sound, right? The short-term volatility is just noise. You got to understand, clearly differentiate risk from volatility.
Fantastic. Yeah, I also really recommend his letters. He was a very prolific writer last year, particularly. So Howard Marks, a giant. Rob, final question. What do you need from Brazil? How can we help you, my friend?
I want you guys to open the border so I can go back and travel. Enjoy more Brazilian food. That's what I want. But look, again, I think Brazil, in terms of innovation, a lot of you guys stuff you do are actually way ahead of the US and way ahead of China. Like there's a company called Pet Center we recently went IPO. This is the first, I would say, pet business in the world that really start penetrating, not just selling pet foods, but also services, insurance, healthcare. US companies are not doing that yet. Chinese companies are doing that. You guys are way ahead of the curve. There's a lot of other super interesting business, like in a hospital. Every hospital in Brazil have insurance arm, which makes it really interesting to reduce a lot of costs. U.S. companies are not doing that. By and large, Chinese hospital groups, insurance companies are not doing that. They're moving towards that. But on those front, like Brazil is really the innovator. It's really in the forefront. So look, I think us and business investors in U.S. and China have a lot to learn from Brazil, and we can't wait for our trip back to Brazil to really understand what's going on lately in Brazil and what can we learn from this super amazing and super innovative and vibrant market.
This is fantastic, Rob. It's so refreshing to see somebody so bullish about Brazil. The mood here, how can I say, it's just not the best.
Look, I know it's the election year, a lot of volatility. You see all the drama right now. They're trying to get over the budget constraint. It's not unique. It's not unique, I can tell you that. We invest in so many different countries. We've seen this over and over again. But in the end, a country's fate not decided by its government regime. It's really decided by the people, the hardworking people, the innovators, entrepreneurs. So, yes, we'll go through a lot of volatility. Maybe next year it could be a lot, especially the election year. But long term, we do have a very bullish view on this continent, on this country.
Rob, I want to say xie. I want to say thank you. This has been fantastic. Really, I learned so much, and I cannot wait for the borders to open and you can come down here to Brazil. We can do this in person. Have a great one, my friend. Thank you so much.
Looking forward to that. Obrigado. Take care. Bye-bye.
Bye-bye, Rob. Bom, que aula, hein, galera? Que bate-papo bacana. Pô, aprendi demais, gostei muito. Vou ficando por aqui, então. Ricardo Geromel, sócio da 3G Radar e Cobre Tecnologia aqui. Instituto Caldeira, tem muita coisa para... Tem que assistir essa com calma depois. Muita coisa para aplicar no nosso dia a dia. Vamos lá fazer isso, então, agora. Um abraço. Tchau, tchau.